Hello and welcome back to Strategic Investor Radio. Again, we're here at the AltsLA conference in Los Angeles. Hundreds of people here. We've been here again fourth straight year in a row. Bigger crowd every year, all about alternative investments. And we're sitting here with Ted Parker, who is with Millenium Trust Company. He handles the business development for the Western U.S. And Ted is somebody who lives just a few miles from me there in Orange County. So Ted, welcome to AltsLA.
Charlie, thank you very much.
So tell us, what is Millenium Trust Company? What do you guys do, and why would you be at a conference for alternative investments?
Great question, Charlie. Millenium Trust Company is a $26 billion custodian of alternative investments.
Custodian in this case means?
Well, we're not cleaning office buildings. We are the IRS requires you to custody your alternative investments with a custodian for any retirement account because they need to keep track of the valuation of those. And a lot of custodians don't like to hold on to them because they don't know how to value them, for one thing.
So a regular custodian would be Fidelity, Schwab, TD Ameritrade, etc.
Exactly, including the big banks and the JP Morgans and Wells Fargo's.
And they often are unwilling to take on certain kinds of investments because they're not publicly traded. Is that the case?
Exactly. When an investor in those companies goes on their computer and sees something go up or down in value, the custodian people don't know what those are invested in. They don't know the value of a private stock or a private real estate.
And so when people want to invest in something like that with their qualified account, IRA, etc., they need to come to a different custodian who kind of specializes in that. And those kinds of investments have the generic term of alternative investments. Is that the case?
Exactly, Charlie. In fact, a lot of the custodians like Schwab and Fidelity, for example, have gotten completely out of the alternative space and refer their clients, investor clients, to us if they want to hold those investments.
And it's not really because those investments are riskier. It's because the nature of them, how do you value them every day, etc. The custodian's responsible for those things, and it's just more difficult because those alternative investments aren't ordinarily and necessarily in the business of having to do that.
Exactly. And if you look at the way institutions manage their portfolios, we heard some of that this morning here at the conference. CalPERS, for example, credits their extra performance to the exposure to private stock. Private stock is not publicly traded, but you and I as investors can now invest in private stock like the institutions are.
Okay, so you guys are required to do that. Give us a story or two about what has happened, cases you've been involved in, and why your services are so needed.
Sure. I had a meeting with an advisor in Tustin, California last year who was concerned about the rise in interest rates in the U.S., and they were concerned about the impact on corporate credit and government bonds. So they found these first trusteed mortgages that paid their investor anywhere from 8 to 10% interest backed by real estate. And when the advisor presented that to their clients, the clients were ecstatic. They wanted to put more than the advisor was willing to put in that investment class.
Okay, so then they came to you and you provided the structure, basically, for them to be able to invest in those investments. Is that it?
Exactly, yeah. We need to review the plan documents, make sure that it's not a vehicle for money laundering or there's not some abusive fees in there or outrageous interest rate returns, and that the investment sponsor, the one who's building the investment, is actually who they say they are. We do the KYC and the AML. And once everything's clean, we accept the asset for custody.
Okay, so how long have you guys been doing this, and what's the size of the company in terms of the assets that you guys custody?
Sure, we were founded in the year 2000, so we're 19 years old this year, and we've got over $26 billion of assets.
That's billion with a B.
Billion with a B, and over 15,000 unique alternative investments that we custody.
Well, so they keep you busy here, Ted.
Absolutely, and a lot of investors don't know they can put these private investments in their retirement accounts.
So you work strictly with advisors. You don't go directly to the public, I presume, then?
Absolutely. It's my job to help educate advisors about the value of adding alternatives to their client portfolios and show them how easy it really is.
And you keep track of the value of these things, and you send out the monthly performance reports or anything?
Well, with private investments, they're not marked to the market. What that means is that the private real estate or the private stock doesn't report daily the valuations. But we do have to get an evaluation at least annually because we have to report that to the IRS.
Okay, so how are you enjoying this conference so far? This is your second year.
Charlie, it gets bigger every year and more interest in the alternative space, and we see that increasing.
So final words for our listeners here, Ted.
Final words, learn about alternative investments, research them, and then take the plunge, invest.
Ted, thank you very much. Appreciate you joining us today. Again, we've been talking with Ted Parker of Millenium Trust Company, and he's out of Orange County, and the company is out of the Chicago area.
Exactly.
Okay, so Ted, thank you very much, and we'll be right back.